Right friends, welcome back to Know About Insurance. This is a new series. I hope that you all enjoyed banking awareness lectures. 30 lectures are already available in YouTube, and now we are going to cover insurance concepts in detail in 5 modules, and this is the first module, and in this module we are going to discuss about meaning of insurance, life insurance, general insurance and history of life insurance. And if you look at what is the meaning of insurance, meaning of insurance is the protection from financial loss, or you can say it is unexpected eventuality. If someone purchased a new car, after some time while traveling on the road, it met with an accident and unexpected loss occurred. In a shop, some theft occurred and some fire occurred in some office, and in a family, the earning member of the family, husband dies suddenly. What will happen to the family? So, to take care of the risks associated with unexpected events, very important, risks associated with unexpected events, that is to protect from financial loss and to act as financial safeguard to the family if something happens to husband. These type of situations, insurance is used or insurance is useful. So, if someone asks insurance, protection from financial loss or risk management or to take care of unexpected eventuality, and I would like to tell you few points. This is a part of a broadly BFSI sector. You may ask, what is BFSI sector? BFSI sector is the banking, financial services and insurance sector, and I would like to tell you 2 important points as far as insurance is concerned. First and the foremost is insurance is the subject matter of solicitation. It is the subject matter of solicitation. What is exactly the meaning of it? Insurance is basically not for sale. It is to be promoted. Why? Because if I want to purchase this product, I have so many alternatives, and by paying money I will get this material immediately. If I want to purchase this product, I may know about the alternatives, and after knowing the alternatives I will purchase this product. So, this is purchasing of the product, but insurance is not purchasing of the product. Insurance is basically risk management. So, insurance is a subject matter of solicitation. That means you have to explain the risks associated with insurance, or you have to explain the risks associated with certain events to the people. That means you can promote insurance but not sell. That means insurance is not a product for selling just like this product, but it is a product to explain various people with regard to the risks associated with it. So, this is very important point. So, several times we come across insurance is subject matter of solicitation. Second important point is mis-selling. This word mis-selling is very important if you look at insurance, because of the reason insurance risks comes after the damage is done. That means if husband dies, wife will get money. If car damages, then only you can have insurance claim. That means it is different from other products. If I want to purchase this product, directly I will give 1000 rupees and I will purchase this product. But insurance risks most of the times comes up after the damage is done. After the death of husband, wife will get the risk cover, or you can say death benefits. And if the car is damaged, then only the risk or financial loss comes into picture. So, these 2 points are very important. One is insurance is the subject matter of solicitation, because of the reason it is not the product for sale. It can only be promoted by explaining the risks associated with life and various other products like cars, travel, heavy vehicles, fire, theft. And second important point is, before giving any product or before giving any insurance product, the risks covered should be properly explained. That means there should not be any scope for mis-selling, right? So, these 2 words please don't forget when we are talking about insurance. And let us move on. Why insurance is required? First and the foremost is new office. If something happens, a fire occurred, there will be huge loss to take care of that risk. Second important point is you purchased a two-wheeler and some accident occurred and subsequently there will be loss to the vehicle. Then health insurance, no one knows which type of disease will come to the persons. And similarly, a person is traveling on motorcycle and unfortunately something happened after accident. Then someone purchased a new house and that house was damaged because of fire. So these things, anything may happen within a fraction of a second. So to act as risk management, so as to take care of financial loss, insurance is essential. And please look into it. LIC, all of you are well aware, Life Insurance Corporation is the leading life insurer in the country. And here insurer is insurance company. And the person whose life is insured is insured. That means I am taking it as an example. Here LIC is the insurer, that may be any other insurance company also, and similarly insured is husband. That means he has taken insurance policy. What this husband will do? He will pay regular premiums to LIC. Premiums may be monthly, quarterly, yearly, it doesn't matter. He will pay regular premiums to LIC and LIC will issue insurance policy. That means the meaning is, if something happens to husband during the tenure of the policy may be 15 years, 20 years, 25 years, 30 years. If something happens to husband, then wife will get money. LIC will pay money to wife, that is death benefits to wife. That means family will be safe if husband dies. That is the meaning of this life insurance. I have taken life insurance as an illustration here to explain what is insurer, what is insured, and what is the difference between premium and insurance policy. And if you look at the types of insurance, life insurance is separate. Then all other insurances are termed under general insurance or non-life insurance. And please don't forget health insurance, accident insurance, two-wheeler insurance, car insurance, truck insurance, travel insurance, office insurance. These are all comes under general insurance. So life insurance is different and general insurance and non-life insurance is different. So general insurance or non-life insurance are one and the same, right? So types of insurance, if you look at it, life insurance and non-life, you have motor insurance, health insurance, accident insurance, travel insurance and house insurance. Like that, several types of non-life insurances are there. And I would like to tell you two important points here. One is travel insurance is not compulsory in our country and travel insurance is compulsory in some countries. Second important point is the motor insurance is compulsory under Motor Vehicle Act of 1988 in our country, because if something happens to third person, then this motor vehicle insurance will take care of those claims. And please don't forget, motor insurance is compulsory in our country as per Motor Vehicle Act of 1988. And if you look at the life insurance companies, LIC, all of you are well aware, 245 Indian and foreign insurance and the provident societies taken over by central government, and LIC finally came into existence in 1956 and 5 crore capital was given by Government of India. We are going to discuss in much detail later on, but look at this life insurance companies. This LIC is directly owned by Government of India, and if you look at other life insurance companies, that is ICICI Prudential, Bajaj Allianz, India First, SBI Life, they are promoted by various companies. Suppose India First is promoted by some banks, SBI Life is promoted by State Bank of India. Like that, several life insurance companies are there in our country, and FDI allowed in insurance sector is 49%, and frequently you come across names like Bajaj Allianz, Birla Sun Life, HDFC Standard, ICICI Prudential, Tata AIG. What exactly it indicates? I would like to go back a little back into the history. Insurance business, that is life insurance business, was nationalized in 1956 General insurance business was nationalized in 1972, all of you are well aware, but from 1990s, from 1991 onwards, when P.V. Narasimha Rao was the Prime Minister and Manmohan Singh was the Finance Minister, liberalization took place in our country. So, liberalization started in the year 1991 and subsequently financial sector reforms came into existence. As part of financial sector reforms, around 1993-94, banking sector was opened for private companies and accordingly ICICI Bank, HDFC Bank came into existence around 1993-94. That means initially banks were nationalized in 1969, 1980 and subsequently as part of the economic reforms of 1990s, again privatization started, right? So, the privatization started in 1990s in banking sector and similarly in insurance sector also this privatization started. Previously, it was the monopoly of Life Insurance Corporation for life insurance and the monopoly of General Insurance Corporation and its subsidiaries for general insurance, but based on R.N. Malhotra committee recommendations, Government of India allowed private sector in life insurance. Not only allowing private sector in life insurance and general insurance, the other important factor is it allowed foreign direct investment into insurance sector. Initially, foreign direct investment of 26% was allowed and now increased to 49%. Now, two things are important. One is the private sector participation in insurance started from around 2000 and the second important point is foreign direct investment into India in insurance sector was allowed initially 26% followed by 49%. And accordingly, with that clause in mind, foreign direct investment as it is allowed in India, this Indian companies formed joint venture with foreign companies and like that this Bajaj Alliance, Birla Sun Life, HDFC Standard, they evolved. And you may ask a pertinent question, what is the need of these Indian financial companies to tie up with the foreign insurance companies? There are two reasons for it. One is the foreign capital will flow into the country. Then second important point is we do not have much expertise in insurance sector because the insurance sector prior to 2000 was in the hands of Government of India. That means the Life Insurance Corporation has got monopoly till the insurance sector is opened for private players. And second important point is as the insurance sector was concentrated in government sector prior to 2000, then there is not much expertise available in this country to expand insurance sector. So, because of these two reasons, these Indian companies had to tie up with foreign companies. If you look at Bajaj Alliance, this is joint venture of Bajaj India company and Alliance. Alliance is a Munich, Germany based company. Then if you look at Birla Sun Life, this Sun Life Financial belongs to Toronto, Canada. HDFC Standard Life belongs to Edinburgh, UK. Then Prudential in ICICI Prudential, this Prudential belongs to New Jersey in United States of America. Tata AIG belongs to Hong Kong. Like that, if you look at other firms, Bharti AXA belongs to Paris, France. Then India First Life Insurance is the joint venture of Bank of Baroda, Andhra Bank and Legal and General of London, United Kingdom. If you look at SBI Life, this is State Bank of India plus BNP Paribas of Paris, France. So, Indian companies tied up with the foreign insurance firms because of two reasons. One is the capital flow into the country, money will come into the country. Most important aspect is the expertise will come into the country because sufficient manpower and expertise is not available in this country because this life insurance and general insurance were the exclusive domain of government sector prior to 2000 and this IRDAA opened doors for private sector participation in insurance. Right. So, if you look at history of life insurance in our country, 1818, this is history of life insurance, not general insurance. So, if I talk about life insurance and general insurance, please treat them as separate entities. Life insurance history is Orient Life Insurance Company by Europeans was established for the first time in Kolkata in the year 1818. Oriental Life Insurance Company was established at Calcutta by Europeans, and initially only Europeans were insured. Indians were not allowed, and if at all Indians were allowed in those days, they were allowed with extra premium, right? Subsequently, in the year 1870, Bombay Mutual Life Assurance Society came up, and it was the first Indian life insurance company in the country. And if someone asks what is the first Indian life insurance company, that is Bombay Mutual Life Assurance Society. Please don't forget. But the first company established by Europeans was at Calcutta, that is Oriental Life Insurance Company. But established by Indians, it is the Bombay Mutual Life Assurance Society of 1870, and these two things please don't forget. And subsequent to 1896, especially during the first decade of 1900s, all of you are well aware, this nationalism, the concept of nationalism, Swadeshi, was the buzzword in early 1900s, and at that time several insurance companies came up in the country. And 1912 Life Insurance Companies Act and the Provident Fund Act were brought, and subsequently in 1928 Indian Insurance Companies Act was brought, which enabled the government to collect statistical information about both the life and non-life insurance businesses. And most important is 1938 Insurance Act that protected the interests of insuring public. And the landmark development in life insurance corporation history took place in 1956 when 245 companies, this figure is very important, 245 companies were taken over, out of which 154 are Indian insurance companies. Please remember these figures. 154 are Indian insurance companies, 16 non-Indian insurance companies, and 75 are Provident Fund companies. And these altogether 245 were taken over by government. First management was taken over, subsequently ownership was taken over, and initially an ordinance was issued, and subsequently Parliament passed the Act on 19th June 1956. And Life Insurance Corporation of India, by amalgamating these 245 entities, was born on 1st September 1956. So, from 1st September 1956, technically, life insurance became the prerogative of Government of India, and it was in the purview of Government of India till the insurance sector opened up for private firms through IRDAI Act of 1999. Right? So, this is the birth of LIC, and with regard to LIC, what are the policies, who is the head of LIC, and all those things, please go through website. I am not going into those details. I am concentrating on concepts of insurance. Right friends, with this let us conclude the first module. Please do join for second module. Have a nice day. Thank you.